Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. Ulster released its monthly update for London's real estate market this week, reflecting the trends that we're seeing in the rest of Canada as London's market continues to reverse. For the third month in a row, London's average and median house price continued to drop, with a flood of new listings, a lack of buyers, leading to continual price decreases. So what I want to do today is go over May's real estate data, look at the differences in affordability from the peak of our market in February versus how much you have to make to buy the average house now, as although we've seen major price decreases in these past 3 months, interest rates have also gone up, leading to small changes in affordability. The Bank of Canada just raised interest rates by 50 basis points, which is no doubt going to have a big impact on our real estate market, and it's looking like they're going to be raising interest rates even more next month. We'll obviously have updates out on this channel on those interest rate hikes. Click like and subscribe if you want to get those updates, but for now, let's get into May's data. As of April, the average price of a home in London was $747,433. That price dropped, although marginally, down to $743,635 in May. So a $4,000 drop, definitely not much, but when we compare that to February's data, we see nearly a $90,000 drop, as February's average price was around $823,000. So only a $4,000 drop in the month of May, but a $90,000 drop since the month of February. The median price of a house in London, however, did drop substantially. If you remember, median price means half as many houses were sold for less than that price and half as many were sold over that price. The median price of a house in London in April was $703,000. That price dropped in the month of May to $687,000. So a $16,000 drop in 1 month, and again, compared to February, a major drop over the last 3 months. In February, the median price of a house in London was $777,000. So exactly a $90,000 drop in the median price of a house in London over a 3-month period. And when we look at the sales to list price ratio, it becomes even more clear why. Sales to list price ratio, that is the amount that houses sell over asking. So if a house is listed for $100,000 and sells for $110,000, the sales to list price ratio would be 110. The sales to list price ratio in April was 115.5. So on average, houses sold for 15.5% more than they were listed for. That number dropped in the month of May down to 108.1. So in May, houses sold for 8.1% more than they were listed for. And a major reason for these price drops and for houses going for so much less over asking than we're accustomed to in the past few months is the months of inventory. There's been a flood of inventory hitting the market. When we look at the months of inventory data, months of inventory meaning if everyone stopped listing their houses right now, how long could the London market still have houses for sale before there were absolutely zero houses left? In April, the months of inventory sat at 1.2. That number jumped up in May to 1.7. So if everybody just stopped listing their houses right now, we would have 1.7 months of inventory before we ran out. So we've seen a major decrease in these past 3 months in our average and median house prices, and it's really because there's so much more inventory on the market with a lack of buyers. But even though our house prices have decreased, with the increase in interest rates, are houses any more affordable in London? Like we said, the average price of a house in London in February was $823,000. At the time, interest rates were so low that we could still qualify based off 5.25%. So if we use minimum down payment requirements and a 25-year amortization with zero debt, the household income required to buy that average house in London in February was $185,000. However, since February, mortgage rates have increased substantially, with the best 5-year insured, fully featured rate that we have available is 4.19. So now instead of qualifying at 5.25, buyers have to qualify at 6.19%. So if we look at the average house price that we have in London right now and use minimum down payment requirements on the 25-year amortization, assuming zero debt, the minimum income required is $175,000. So in just over 3 months, we've seen nearly $100,000 in price drops, but we've only seen affordability increase by about $10,000. So to get that average house price that you could have gotten in February, you can make $10,000 less now than you had to in February. What that means is less and less money is going to the buyers, is going into the market, and more money is going out in interest to the banks. News at 11. So, to summarize, the average price is down, although marginally. The median price is down fairly substantially, $16,000. Both are down close to $100,000 from a little over 3 months ago. We now have far more inventory on the market than we had months ago, and houses are going for far less over ask than they did previously. So, in general, in May, the market continued to correct in London, and I would suspect that we're going to see it correct even more next month once these major rate hikes coming down from the Bank of Canada have time to settle in. Many people purchasing in the May market still had pre-approvals left over from February, from March, when rates were still substantially lower. So they were able to qualify for far more than buyers just getting their pre-approvals now are able to qualify for. As rates go up, the amount that the average borrower can qualify for goes down, and I think this is showing up in London's market and Canada's real estate market in general, and we're probably just going to see more of this for the foreseeable future. We'll obviously have updates on that on this channel. Click like and subscribe if you want to get those updates, and thanks so much for watching.